Good evening. This is Doc Severson for the Theo Night Report for Tuesday, December 12th. Okay, first of all, what happened in the market today? I don't know what I was thinking last week when I said that if the price dips here and is arrested by the 61.8% retracement, that we would likely see the price come down here. Well, it wasn't. I don't know why I didn't think that the dip was not going to be bought. The dip was bought once again. So at exhaustion, we saw the price come down, and that was an attractive enough dip. That 40-point move that I had there from about 26.60 down to 26.20 was enough to cause a flurry of buying over the last few days. And now we printed all-time new highs once again today in the S&P 500. We have not cleared this larger time frame exhaustion signal here on the monthly, the weekly, and the daily has done just enough of this sideways movement here over the last few days to build up a little bit more energy, and maybe we'll see a little bit more movement to the upside. Who knows what's going to happen tomorrow? We'll get to that in just a minute. But honestly, guys, this is kind of the nature of what markets go through when they reach euphoria phase. This is where we go into almost that infinite slope to the upside as we reach higher. So this is actually almost a textbook version of an S-shaped curve here that I normally see on markets where they start strong off the bottom. A lot of this is due to short covering. And then we reach an area in here where it gets kind of thick in the middle. And honestly, a lot of times this is due to the exhaustion that we do see from that initial move. So it goes sideways until we reach another energy peak, and then this is where the vertical movement starts to really kick in. And there's no, as we're finding out from bubbles, we're being reminded about bubbles that were years past, right? So this last final move can be very, very violent. Now again, don't get me wrong here. I'm not predicting another bear market. I really don't think so. I think we're just due for kind of a halfway house up here. Perhaps similar or a little bit less than what we went through 2015, 2016. At least a pause is coming up, but we may end up seeing the price go quite a bit higher before this thing actually does arrest itself. So we also saw the same thing happening in the Dow Industrials today. That dip was once again bought. We have all-time new highs here, just barely on the Dow Industrials. What we're seeing this occur through is just complete and total rotation. So once one thing is up, like the other day we had Boeing Aerospace selling off. So Boeing was selling off, and today making a new high. So every little microscopic dip is being bought in this market as alpha and yield are at an absolute premium. Now, what's not working right now are the small caps. So we did the same thing with the fibs and the small caps the other day, and we said, all right, the price has got to get up through this 61.8 retracement. Set a marker there for that. That has not been hit. And so far, 38.2 is overhead resistance. And we may end up printing, and this is the interesting part here, we may end up printing a lower high on the Russell 2000. So this thing came screaming up here. All right, so this dip, everybody sees the dip. Everybody thinks it's going to be bought once again. If that creates a lower high, we're going to get a flush of selling coming in here as the price violates the 50-day moving average, which is going to catch some attention lately. And lastly, finishing up with the Nasdaq, believe it or not, this chart is in better shape than everything else that we've looked at from a major index perspective. Yes, we're still into monthly exhaustion, but the weekly chart has done enough shake and bake lately. This is enough consolidation. You can actually see this as we look at the daily chart. You can see that this is a lot of non-linear behavior. Non-linear behavior has the same effect as coiling up a spring. Coiling up a spring like this, getting tighter and tighter, building up that potential energy. And we're seeing that high degree of potential energy here on the daily chart. So we've seen the Nasdaq be sort of a funding source for a lot of this other rotation lately. That may rotate back into the Nasdaq next. So it's just a big musical chairs going round and round and round. Shell game rotation right now. Shell game rotation almost happening on a daily basis. So the next risk event in the market, next big one that we have here is tomorrow's FOMC meeting. So this comes along tomorrow. The rate announcement comes at 2 o'clock Eastern. And then about 30 minutes later, Yellen gives what is likely to be her last chairman press conference to explain what occurred with the meeting rates. And right now there is an 87% chance of a rate hike tomorrow. This has actually slipped quite a bit. This was sitting here in the high 90s just 2 weeks ago, and now is starting to come down a little bit into 87.6. Now the reason why I think is because it's starting to move a little bit higher here. There's a little bit more of this. So instead of maybe a quarter-point rate hike, there may be some camps that are out there going to be campaigning for a 0.5% rate hike. So obviously what's priced into the market right now today is a quarter-point rate hike right there. If we do see a 0.5-point rate hike, which I think is unlikely since this is Yellen's last meeting, I don't think she's going to go out in a bang and say, surprise, got a 0.5-point rate hike for you guys. I mean, to me, that would be very, very uncharacteristic for Janet Yellen. She has played according to Hoyle. She's played according to the script every single point in her career as the Fed chairman. So watch out for this tomorrow. And if this does happen tomorrow, it's going to be a very interesting press conference. There's going to be a lot of attention, a lot of shouting reporters asking her why she did that. Now, you can't go very far these days without hearing about Bitcoin. It's probably the lead story on just about every stock media front page that's out there. What's happening with Bitcoin, and actually even some of the other cryptocurrencies are starting to get some attention. And what is the reason why? Well, of course, on Sunday evening, the Bitcoin futures were released, and I thought we'd see a little bit more activity than we really have. And this is a tick chart. And right now we can adjust this to something smaller here. Right now I have 185. We can go down to something like 100 ticks. So 100 ticks means each candle requires 100 transactions to print a candle. And this is everything from Sunday night. Everything from Sunday night is fitting onto this chart. So we've had almost 48 hours of activity, and this is all the candles that we've printed. This is nothing when you compare this versus the activity on the S&P 500 futures, for example. Now, the problem is that these are not exactly great instruments to trade. First of all, the notional value of these things is enormous. There's a fairly large movement per tick on these contracts, so you can either make a great deal or lose a great deal with just about every tick on these things. And the spread's wide, first of all, so you can see the spread right now is about 30 points wide on Bitcoin, on the Bitcoin futures, that is. Now notice also the volume on these. So the volume on these just today is only 1,500 contracts. That plus the amount of margin to trade these things is pretty large. These are not the same type of margin that you're going to get on a Russell or a mini Dow or S&P futures traded through a normal broker with intraday margin. These are huge. Now the source of this graph here is Zero Hedge, and this showed the activity on Sunday evening. So here's the Bitcoin spot. This is the actual Bitcoin price as measured from the Gemini exchange. There's many different exchanges that are out there. And here's the Bitcoin futures of the front month contract. You can see that there's actually a difference here, and that is due to cost to carry. You can also see that there's been a couple of halts during the trading. So these are, it gets up to 10% movement up or down. It's going to halt for a few minutes. That didn't do much of anything, right? So we actually had a 20% halt a few minutes later. So this did not quite have the effect that I thought it would have when I thought that, oh boy, here we go, CBOE futures getting involved. Everybody is going to short the living daylights out of this thing. Really didn't happen. Part of the problem also is because some of the brokers out there said, thou shalt not short this contract, which in retrospect kind of became a self-fulfilling prophecy for it not able to depress the price here. Now, don't forget the Chicago Merc is coming out with their own version of the contract. It's actually even bigger than the CBOE's one. And it's larger notional value. It's going to be larger per tick movement, larger margin. So this is probably more aimed at the institutional investor than the SIBO, which is more aimed at the retail investor. But right now, the only thing I see as a functional use for this CBOE contract is as a long hedge against Bitcoin holdings. With the liquidity of this contract, as well as the wide spreads, as well as the lack of support from all the exchanges, or I should say the brokers out there, right now this is not a viable contract to trade to look for price swings in Bitcoin. You're better off sticking with the spot right now and all of the convoluted process that actually obtaining a Bitcoin requires as of today. So that's it for today's report. Thanks for listening, folks. We'll see you tomorrow.